It's been investigated for accounting irregularities, but is the fall in the Under Armour share price actually a buying opportunity? Hello, I'm David Jones. I've been a technical analyst in financial markets for 25 years, and this is our channel dedicated to looking at some interesting US stocks. I thought we'd take a look at Under Armour. It's been in the news recently because of its earnings, but more controversially, because it's being investigated by US federal authorities over accounting irregularities. Not surprisingly, the share price has been hit pretty hard. So in a second, we'll take a look at the reaction. I'll come back and talk a bit more about the investigation and its earnings. Then we'll jump back on the charts to look at things in a bit more detail, because I do wonder if this could actually end up being a buying opportunity. As usual, if you're watching this, if you can subscribe, support the channel, and we'll continue to push out content on a regular basis. Let's catch up with the market reaction to that investigation news. So here's the last couple of months on Under Armour. So we'd seen that this good recovery, solid recovery from $16 towards the end of August into November, trading up to 19 after having been up towards 19.50. Then this news broke of the investigation. So not surprisingly, we saw the share price really hard hit. We had the earnings out as well, but the share price dropped by more than 15%, trading back below those lows from August. But I think it's still interesting. I'm going to talk a bit more about the investigation now and the earnings. We'll come back and look at this in a bit more detail to see if actually this knee-jerk reaction by the market could end up being an opportunity. We're going to go back into that in a second and look at things in a bit more detail. But clearly you can see its earnings were overshadowed by the news of the US federal investigation. It's been accused of shifting sales from one quarter to the next to try and present a more positive financial picture. You know, we should say the company said that it's done nothing wrong. There is nothing wrong with its accounting, but not surprisingly, you know, investors don't like uncertainty. We've seen the share price pretty hard hit. On top of that, just at the end of October, the chief exec and founder of Under Armour said he'd be stepping down from the chief executive role, and that will take effect in January of next year. Again, perhaps that's something that doesn't really help investors' confidence. Plus, from 2016 through to 2017, the company had been through 3 chief financial officers. So all of this has, I think, unnerved investors over recent years, and coupled with maybe some of the stalling sales growth we've seen for Under Armour, you know, it's a reason why we have seen their shares really underperform over recent years. But we did have some positive news recently, understandably overshadowed, but in November their earnings came in. The company made 23 cents a share, and that was versus the 18 cents a share the market was expecting. We're going to jump back onto the charts in a second, but let me just talk about some of the interesting levels to watch. We've got resistance levels left because the share price has fallen so far over the past couple of weeks or so. There are some resistance levels left from not long ago, but they are quite a way away from where the price is. But where it's really interesting is on the downside, because there has been so much historical support from $15. We're going to jump back and have a look at that in a second. This is why I wonder, do we actually see an opportunity down here? Let's have a look at the chart in a lot more detail. So here's a quick look at the last 3 years for Under Armour. You can see that clearly they have fallen out of favour with investors. They were up at $45 April 2016, and then by November 2017 had traded down almost as low as $10 a share. But since then they have been trying to stage a recovery. Let's just pick up on this recovery off these November lows. So the longer term trend looks something like this. From those November lows, just above $10 a share, you know, the share price had hit as high as $24 just in the summer of 2019, and since then had been hard hit. We saw the trend line break, but I think trend line breaks can be opportunities, because just because a trend line has broken doesn't necessarily mean the share price is going to fall off a cliff and a new downtrend is going to start. It can just mean that maybe the trend is going to continue, just at a lower rate. And that had been the case until we had this news about the federal investigation. So for me, what makes it interesting now is this low from December 2018. We saw them sell off into $15 a share and then reverse really sharply. And this is pretty much where we are now. So I think we are in bounce or bust territory, really, for Under Armour. And this is what makes it an interesting share. I think if they're going to recover from anywhere, then this is really the place. So I suppose the aggressive idea here is to be a buyer but with stops the other side of $15. I think if we start sliding below 15, we will see more investors turn bearish on the stock, and the risk is we get a push back down in the short term, at least to March 2018 levels, sort of sub $14 a share. Not surprisingly, given the fall, the RSI is at an extreme. We're oversold. The last time we were oversold, we go back to the summer of 2019. It took a while to come out of oversold, but it did eventually, and it marked a turning point. So I do think this $15 a share is a really key level. Let's take a look at the really short term. So here we can see the gap when this news hit the market, and the shares gapping down from almost 19 to start trading at around about $16, then did actually slip lower. They filled a tiny amount of that gap. But again, I think for me, this does show the importance of these old lows. So the post-shock low coming in at sort of 15.35, that sort of area, that $15 low from a year ago. This is really the big level. And I think for me, in terms of risk reward, it's an interesting one down here, because if we're a buyer where it is now trading just below 16 with stops the other side of 15, we have maybe a dollar a share risk, but the potential, if we do see a bit more positive news coming out, to perhaps claw our way back up to those October levels up at $19. So at the moment, the price action is still a little bit, I think, indeterminate. But I think it's a really interesting one to watch, to see if we see this 15 to 15.35 area continue to hold and some sort of recovery start from here. So accusation of financial irregularity is never good, of course, but it's going to be really interesting to see if Under Armour can build a base down here ahead of $15. We'll wrap things up there. So from me, David Jones, good luck with your investing and trading.